Why Warren Buffett has started preparing for a stock market correction. The investing world can be intimidating, especially when big names like Warren Buffett talk about building huge cash reserves. Buffett, often referred to as the world's greatest investor, has been sitting on a massive pile of cash, $325 billion to be exact. But why? Is he predicting a stock market crash? And how can you, as a regular investor, prepare for such a possibility? In this article, we'll dive into stock market corrections, what could cause them, and how you can be ready, just like Warren Buffett. What is a stock market correction? A stock market correction happens when the prices of stocks fall by 10% or more from their most recent high. While this can sound alarming, it's actually a normal part of how markets work. Corrections happen because of different reasons, like changes in interest rates, economic problems, or even events like wars or pandemics. For example, when the COVID-19 pandemic hit, it led to a massive drop in stock prices. Corrections can happen to individual stocks. Think of Tesla or Nvidia, entire industries like technology, or even the whole market. One clear example is the market correction that occurred in early 2022 when inflation started rising and the Federal Reserve signaled that it would increase interest rates. What's the difference between a correction and a bear market? You may have also heard the term bear market. A bear market is when stock prices fall by more than 20%, and it's not just a quick drop, but a prolonged period of falling prices. This can last for months or even years. So, a correction is a short-term decline, whereas a bear market lasts much longer. For instance, the market's initial drop in 2022 turned into a bear market, largely because of rising interest rates and other economic issues. While stock market corrections can be uncomfortable, they are a natural part of investing. The important thing is not to panic or try to time the market, which brings us to our next topic. Should we be worried about the current market situation? Is a stock market correction coming? So, is a market correction on the way? While no one knows for sure, many smart investors, including Warren Buffett, are preparing for possible turbulence in the market. The US stock market is currently seen as overvalued, meaning stocks are more expensive than their actual value. Warren Buffett himself has said that right now the market conditions seem attractive to him, but he's holding on to a large amount of cash just in case things take a turn. Even though the market may seem overvalued, that doesn't automatically mean it will crash. Sometimes markets can stay overpriced for a long time. As John Maynard Keynes famously said, the stock market can stay irrational longer than you can stay solvent. This means that even if stocks seem too expensive, they can stay that way longer than you might expect. So, don't always count on overvaluation being a reason for a correction. What could cause a market correction? While the market may seem expensive, there are other factors that could trigger a correction. Here are some things to keep an eye on. Political changes. A shift in government, new policies, or new laws could shake up the stock market. For example, the upcoming US elections could lead to changes in how the market behaves. Inflation and interest rates. If inflation continues to rise, the Federal Reserve may raise interest rates. Higher rates can make borrowing more expensive, slowing down the economy and affecting stock prices. Global issues, events like wars, economic instability, or tensions between countries, e.g., China and Russia, could lead to investor fear, which might cause the stock market to fall. Recession fears. If the US economy falls into a recession, stock prices could drop. A recession usually happens when the economy slows down and companies start to make less money. Debt issues. The US has a growing national debt, and any concerns about the government not being able to manage that debt could trigger market panic. How to prepare for a stock market correction. Now that we know what might cause a correction, the next question is, how can you prepare? Here's where Warren Buffett's strategy comes in. He is known for keeping a large cash reserve so that when the market does correct, he can take advantage of it. Diversify your investments. One of the easiest ways to prepare for a market correction is by diversifying your investments. This means spreading your money across different types of assets, stocks, bonds, real estate, etc., and industries. When one sector goes down, others might go up, helping to balance things out. By investing in a variety of things, you lower your risk, and you're less likely to lose everything if the market drops. This approach also helps you ride out the ups and downs of the market, which is important because, as Buffett says, stock prices can stay irrational for a long time. 2. Have cash ready for opportunities. While diversifying is important, there are times when you might want to have extra cash on hand. Warren Buffett often keeps a lot of cash in reserve so that when a market correction comes, he can buy high-quality stocks at lower prices. Having cash on the sidelines allows you to jump on opportunities when stocks suddenly become cheaper. This is how Buffett made billions of dollars during the 2008 financial crisis. For example, he invested $5 billion in Goldman Sachs, $3 billion in General Electric, and $5 billion in Bank of America, all at bargain prices. These investments helped him make huge profits in the years that followed. 3. Stay up to date with market news. Another key part of preparing for a correction is staying informed. When the market is calm, it's easy to forget about your investments. But during a correction, you need to be ready to act fast. Buffett always advises investors to keep track of earnings reports, company updates, and market trends. This helps you stay aware of which stocks might be worth buying when the market corrects. 4. Don't try to time the market. While having cash and being prepared is important, you should never try to predict exactly when a market correction will happen. Trying to time the market, guessing when stock prices will go up or down, is a risky strategy. Instead, focus on investing in great businesses and hold on to them for the long term. Market corrections are a natural part of investing, but they don't last forever. If you stay patient and keep your investments in good companies, you'll usually come out ahead in the long run. Outro. While the stock market may seem overvalued, predicting a correction is nearly impossible. Instead of betting on when the market will drop, focus on being prepared by diversifying your investments and having cash ready for opportunities. Warren Buffett's strategy is simple. Build a solid, diversified portfolio, keep some cash in reserve, and stay informed. That way, when the market does correct, you can take advantage of the opportunities it creates. Remember, the best way to succeed in investing is by being patient and sticking to your strategy, even when times are uncertain. So, keep learning, stay prepared, and take advantage of the long-term growth the market has to offer.